Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video, I'm going to be taking you through the Forex market wrap. We're going to highlight the news this week and some charts that we were looking at. So first of all, we had a very high impact news week, adds lots of volatility into the market. Usually when volatility is increased, we see risk assets decrease and we see safe haven assets increase. And what I mean by that is usually the Aussie, Kiwi, CAD usually suffer a little bit, and then you have the safe havens like the US dollar and the yen gain some strength. So that's what we've pretty much seen this week, but also was driven by certain news announcements. Now, first of all, the first central bank that was highlighted was the RBA. The RBA raised interest rates from 0.1% to 0.35%. So they actually jumped estimates, which actually helped the Australian dollar gain a little bit in the short term. It was quickly overturned. However, there was a small jolt in the market for Aussie. The next sort of big high impact data news that we were really keeping our eye on this week was the FOMC statement and the federal funds rate. So we knew that they were going to hike interest rates by 50 basis points to 1%. That was already priced into the market. We saw the dollar really shift in that moment and the dollar started to break to the downside. However, in the FOMC press conference then, Federal Reserve Chairman Jerome Powell highlighted that the Federal Reserve are going to hike interest rates by 50 basis points in the next two meetings. So again, pretty much priced in that we're going to see a move to around about 2%. Could be higher depending on how inflation reacts to a 2% interest rate. So we could see it between sort of 2 to 3%. Coming towards the sort of end of the year, but the next two releases, we're going to see 50 basis points jump unless something dramatically changes. Now, also we had some risk sentiment in the market this week. There's been a lot of news in China, a lot of lockdown news as well, as they're looking to become COVID zero is pretty much the saying at the moment, where they're not really going to open everything up until they see COVID rates avoided essentially, and no COVID. So they've gone into multiple lockdowns. So there's a little bit of risk around this week as well, which has helped the US dollar regain those losses from this meeting. Not only that, obviously the NFP report came out, a bit of a mixed bag, to be honest. As we saw, jobs coming at a positive number, 428,000 jobs were created. We had a decrease, however, in the average hourly earnings, which basically suggests that the jobs that were created here were of less value to the economy. And we've seen an increase in the, not an increase in the unemployment rate, but a hold at 3.6%. So, yeah, bit of a mixed bag for the NFP numbers, but still showing that there has been an effective sort of jobs data coming out. The most interesting, I would say, was the Bank of England. So Bank of England announced another hike up to 1%. Now, what was quite interesting about this was the comments from the Bank of England Governor Bailey. Basically outlined what is called stagflation. And stagflation is essentially when you have a rise in interest rate, okay, but a increase in unemployment rate, which is not what you typically see when an interest rate or an inflation rate is rising, because inflation rates rising typically suggests that the economy is doing fairly well. If an economy was doing fairly well, we shouldn't really see unemployment increasing, which is what we've seen in the UK. So that stagflation has made the Bank of England governor talk about fears of recession. So that really saw the pound sink fairly low, and it looks like it could quite continue for the pound. over the next few weeks. So that's the news out of the way. I talked for 5 minutes about the news, which is it just shows you how much of that was high impact. So really interesting week. I'm going to start off with the euro US dollar, because actually a fairly flat week for the euro. You can see here market basically formed a inside candle, low ranging candlestick. Was expecting a little bit more from this market this week. We did talk about the potential for a reversal through the fact that the inflation, the interest rate could be priced in, or was priced in from the FOMC. So we were looking for long opportunities if the price could sustain above these highs in here, and it just didn't quite do that. We broke out the highs from the news announcement, but we couldn't sustain above it, and price fell quickly back within this overall range. So no real big updates here for euro US dollar price, still trading within that range. Going on to Kiwi then, so expected another decrease in the New Zealand dollar. Fairly bearish market at the moment. You can see strong bearish weekly candlesticks. Price recently broke through this key swing low, and one area that we were looking at was this area up here around about 65.17, and essentially this high around about 65.35 or 65.40. We were looking for around this area to act as resistance. Did find some bearish rejection candlesticks going on here. Actually formed a very strong reversal pattern in the market, and if you do see these are very strong reversal patterns, and that pattern is this one here, where you have a strong impulsive move, you then get an inside bearish candlestick, and then the next candle breaks above that inside candle high, closes back within that inside candle range. Very strong reversal pattern to form in the market, and price did start breaking to the downside there. Euro-Aus, so we outlined Euro-Aus longs this week. I like the idea of being a seller of the Australian dollar. Now we were looking at it a little bit higher up, so the original demand zone was around about here, and price did dip into it, and we did see some short-term buyers. However, this was around the time of the RBA meeting. We then saw prices move to the downside quite significantly, but you can see here that price still remains bullish, because on the daily time frame on this left hand side, the market is still making higher highs and higher lows, and the demand zone was a little bit lower for the daily time frame. So price came back into it, rejected away, and moved back to the upside there. So can that continue? Basically, we're at resistance at the moment, but we may see some further upside to this market. Finally then, gold. So we're looking at the gold prices this week, again kind of suggesting that because of the higher risk in the market, we could see a bit more upside to the price of gold. We were talking about the potential for price to break out of this consolidative zone and retest, which is pretty much what has happened this week. We did come back up into these swing highs here and reject back to the downside after the news was announced. But essentially gold could potentially move back to the upside because of the current situation with the risk sentiment in the market. If, however, the dollar continues to strengthen because of the potential for more rate hikes to come, then the gold price here may struggle to find the recent highs. We may just kind of stay around current areas or stay below the sort of 1916. But we'll keep an eye on gold, and we'll have a little look at the outlook next week. So thanks for watching the video content this week. Hope you enjoyed it. If you did, leave this video a thumbs up, subscribe to the YouTube channel to see some more of our Forex trading content, and I'll speak to you in the next video.